Breaking right now, this could be the moment every Iraqi Dinar watcher has been waiting for, because the signals coming out of Baghdad are no longer scattered rumors, but a pattern that is forming in real time. So before you scroll away, make sure you like this video, subscribe to the channel, and stay with me till the end, because what you are about to hear connects politics, money banking reform, and regional pressure into one powerful narrative that directly affects the future of the Iraqi dinar and the wider Middle East economy. And as we begin today's update, it is important to understand that Iraq is standing at a very sensitive turning point where constitutional deadlines, political balance, and currency management are moving on the same timeline, and that alone has caught the attention of international observers, analysts, and financial institutions, who normally stay quiet until something meaningful is underway. According to the latest reports coming from Iraqi parliamentary circles, the government is facing firm constitutional timeframes related to leadership structure and executive authority, and history has shown that whenever Iraq approaches political clarity, the Central Bank of Iraq gains more room to implement long-delayed monetary tools. Political stability is not just a headline issue, it directly affects investor confidence, banking compliance, and foreign currency flows. And this is why recent meetings between government officials and CBI representatives are being closely watched, because they indicate coordination rather than conflict. At the same time, Iraq's shift away from physical cash is accelerating faster than many expected. Digital salaries, electronic tax systems, point-of-sale expansion, and interbank settlement platforms are no longer pilot projects. They are becoming operational realities, and this transition matters, because a cash-heavy economy limits monetary control, while a digital system allows the central bank to track liquidity, manage inflation, and stabilize exchange rate pressure more effectively. Sources inside Iraq's banking sector confirm that electronic payment adoption has surged over recent months, driven by both government mandates and private sector incentives, which aligns with international compliance standards demanded by correspondent banks, especially in the United States. This connects directly to the dinar, because improved compliance reduces restrictions on dollar access and strengthens confidence in the official exchange mechanism. Meanwhile, regional dynamics are adding another layer of urgency as tensions involving Iran continue to influence cross-border trade, currency flows, and banking scrutiny. Iraq has been under pressure to assert financial sovereignty and reduce exposure to external sanctions, risk, and recent enforcement actions against non-compliant banks show that Baghdad and the CBI are willing to take politically difficult steps to clean up the system. This is not cosmetic reform, it is structural, and while it creates short-term stress, it lays the groundwork for long-term currency credibility. Analysts following bond market chatter and sovereign finance movements have also pointed out unusual activity, suggesting that Iraq is positioning itself more visibly within international financial frameworks, though no official announcements have been made. The timing aligns with broader reform goals discussed in previous government roadmaps and budget planning cycles. It is also worth noting that multiple dinar analysts and regional economic observers are now independently highlighting the same themes, which include tighter monetary policy, increased transparency, digital control mechanisms, and political deadlines, converging rather than drifting apart. And when independent sources begin echoing similar observations, it usually means the underlying data is pointing in the same direction. However, it is critical to remain grounded and realistic, because currency reform is a process, not a single event, and Iraq's leadership understands that sudden shocks could destabilize markets, which is why progress appears deliberate rather than dramatic. But deliberate does not mean inactive. Behind-the-scenes systems are being tested, regulations enforced, and institutional habits changed, all of which are prerequisites for any meaningful adjustment in currency behavior, whether that comes through rate stability, international normalization, or future structural recalibration. And for viewers tracking the Iraqi dinar from abroad, the key takeaway is not hype, but alignment. When politics, banking, technology, and regional strategy begin moving together, it signals intent and direction, even if outcomes take time. So if you want to stay ahead of surface-level headlines and truly understand what is shaping Iraq's monetary future, make sure you stay connected with this channel because we focus on context, not noise. And before you leave, drop your thoughts. In the comments, let us know where you're watching from and share this video with anyone following the dinar story because informed discussion is how we separate speculation from reality. And if you value fact-based analysis over rumors, hit the subscribe button now. Turn on notifications and stay with us as this story continues to unfold in real time.